May profits be upon you. Thank you for sharing a few moments of your Saturday with me. All right. I'm gonna make sure you didn't waste your time. Okay, check it out. I'm gonna go through four of the four markets that I believe are going to be potentially some really good trading for next week. All right, now let's look at the RT money meter. I've updated it for this week. The RT money meter tracks the rate of change in the currencies, in the individual currencies over a 15-week period. Got it? Now, what am I want you to look at? The weak and the strong. Let's look at the strong first. US dollar. US dollar didn't change much from 8.45 last week to 8.39 this week. Still in the number one position, still in the green, still the strongest. All right, everybody else is on the weak side. However, you got to look closely. Aussie, minus 204 last week, minus 132 this week. Gained a little strength. Aha. CAD, basically the same, minus 235 last week. This week, minus 230, minus 253. All right. New Zealand dollar, haha, minus 509 last week, minus 453. This week, gaining a little strength. Okay. Let's go to the week now. Right to the seller. Yen, minus 1204 last week, minus 1292 this week, got a little bit weaker. And it's the weakest by far of all the other pairs. All right. So what I want to do is match up the strong with the weak. All right. The top four against the bottom, the very bottom yen. Okay. Here's the deal with the yen though. It's been weak for weeks. All right, always at the bottom, right? Minus 720. And look at the dates, all right, all the way down to minus 12. It's just been getting weaker, weaker. You know what the policy, the monetary policy over there with the Bank of Japan is? They're going to keep buying up bonds to keep the yen undervalued and everything, and all that good stuff, right? Here's the deal. I'm looking at yen futures right now on the screen in the monthly time frame. You can see it's been weak and dropping since 2021 January. Boom, gaining momentum, gaining momentum no less. Okay. Now it broke structure to the downside, so this is confirmed. Bearish, a very, very bearish market. All right. However, see this blue field? That represents a demand zone. We've ran into a demand zone. What kind of demand zone, you might ask? RT money. Well, look to the left. This is the demand that was set up. You see how much momentum, where the volume came in, the momentum came in to bring price up from this level. All right. When this demand was made, it broke structure. It broke structure to the upside. It took liquidity on the way up. It left a displacement. It left a fair value gap, an imbalance. This is a strong and key level of demand. We haven't mitigated this demand zone throughout the years until now. All right. So when you see a break of structure, the first thing you should know is that after a break of structure, you expect a return to impulse, a return to the origin of the impulse that caused that break of structure. What am I saying? A retracement. It's about time to start thinking that maybe price may reverse. And what do we get a clue at looking at the candles? Yes, we do. Look at the momentum in this bearish candle. Look where the wick ends. This is the new month here. We're at the beginning of the new month. It gave us a wick to the upside. All right. on a bearish candle. What does that usually mean? It just means that there seems to be an intent to go lower. You understand? We can expect price to want to go a little bit lower. Now, I want you also to notice we didn't make a lower low. Aha! We did not make a lower low here. Not yet. We haven't broken that low yet. So this requires some observation, right? Some monitoring. Let's go to the weekly. Maybe we can get a clue there with some candlesticks. Aha. All of these candles are part of this down move, right? They're all bearish candles and they're breaking the low of the previous candle, except the new week. All right, the week closed above that low, the previous week's low. Is this indicating that price is showing signs of exhaustion? We don't see that hard momentum anymore, because this should have broken that low. So maybe we might be seeing a slow in momentum. This is the monthly, this is the weekly. Maybe we're seeing a slow in momentum. Maybe we might be seeing an indication, because this is an inside candle. What is an inside candle? The trading range of this current candle is within the trading range of the previous candle. The high and low of that candle is wider than the current candle. That's an inside candle. This could be an early indication that price may be about to swoop up on us. All right. And what am I looking for? I'm looking for price to make a low, pull back, make a lower low, breaking this low, right? Breaking this low here. All right. And then the impulse, an impulse that breaks the swing high here. That's what I want to see. After it breaks that structure, I'm looking for a return to impulse somewhere in this leg of structure, that impulsive move to the upside. This would be where you would take an entry if you're trading this futures. I'm going to go to the daily, and maybe we can see something even better. All right, what do we have? We got a low so far. We have a lower low. We got that pullback. This establishes my point here. All right, the point of, if price comes up and takes that out, I'm waiting for it to come back so I can mark off a bullish order block, a zone of demand where price could come back and find that support that rejects to the upside. Now, if it doesn't happen, say this low gets taken, then this becomes my swing point. You understand? And I would look for a price to break this one. And if it does, I'm looking for it to come back into this zone, hit that demand zone down here as it pulls back to return to impulse, and I'll take that one. That's the way this works. I hope you understand what I'm talking about. We may be on the verge of seeing price and the strength come back into the yen currency, that we call the yen, all right, the Japanese yen. All right, so be aware, be on the lookout. This could go lower. All right, why do I have this middle line here? Because this is the equilibrium. This is the middle, the midpoint of this zone of demand. Sorry. This is the midpoint of this zone of demand. And this is where I like to see price take its mitigations. And because I know if it comes back to mitigate, there's a good chance that it's just going to plow on through. You understand? When it mitigates up here, then I say, oh, well, it can go lower to the midpoint. It could, there's room for it to go lower. Do you understand? That midpoint is very important. It's the median threshold. All right. And that's where I like to see mitigations go. All right. Reach anyway. So with that in mind, let's go to the pairs. Where's my watch list? My hot watch list. Let's start with the US dollar yen, the strongest to the weakest. All right. We'll look at the monthly. And this is a very easy market to read, right? Straight up. Is that a bullish market or a bearish market? Of course, it's bullish. All right. And you obviously we broke structure to the upside. All right. What do you expect here? A return to impulse. You expect a pullback, which would mean what? Yen strength pulling down US dollar. You understand? This is all coordinated. This is all going to work together. Either it works all together or it doesn't. All right. But I had I'm just mapping out what are some likely scenarios. I'm not trying to predict. All right. We're going to trade the chart in front of us. All right. So let's go to the weekly, see if we can see anything in the price action. All right. If it's giving us any clues. All right. Look at that. Looking at the candles. What do we see? Same kind of situation. Price is moving up with very bullish candles. Then we hit a doji. All right. And then what happens here? This weekly candle, which is bullish, closed within the range of the previous candle. Got the same kind of situation going on over here, except the inverse of it, right? So what am I looking for? I'm going to go to the lower time frame, like the daily, to see if I can see something in the price action. All right. What do we have here? All right. Let me use the highlighter. All right. What do we have here? We have push up, a pullback, a push up, another pullback. Should we find that we break that high, then we're just making a higher high, right? All right, but things will proceed as follows. And any shorts in this market would be invalid. All right, but until that happens, all right, we're going to watch this zone right here. Why? Because we see that price made that high here. We pulled down, and we are in the zone, the supply zone that it left behind. All right, we can see it a little more clearly on the 4 hour. And what we want to note is price impulse, pullback, accumulated here. All right, this period of consolidation is an accumulative period. All right, accumulating orders, and then you see price manipulate, taking the low, taking the liquidity here, and then manipulating up to the side, up to the buy side, excuse me, and taking out the highs here for that liquidity. All right, we done wiped out people who are taking longs and people who are taking shorts, right? We didn't do it, market makers did, of course. All right, so we are in this zone of supply. This should be a different color, of course. All right, and what am I looking for? I'm looking for the same pattern that I just told you about, a high made, a pullback, a higher high, an impulse low, breaking that pullback low there, and a return to impulse and then down. I'm looking for that over here. Okay, and you look for it on the lower time frames. All right, as soon as price gives me that, then I know that we can take shorts here. it may do one of these numbers, take the, when it opens, it may take out that high. All right, respect this protected high. All right, just wick up and then start coming down. All right, that's what I'm looking for. So we want to see that setup. We want confirmations. We want a confirmation that price is definitely looking to go lower. And it has to demonstrate that with a break of structure. It has to demonstrate it. All right. See this break of structure line I got down here? That's what I'm talking about. You understand? All right. What price is doing now, it's made a low. It went made a lower low. It pulled up maybe to return to impulse. Right. We're in the impulsing order block. I'm looking for price to give us this kind of configuration, and we'll see it on the lower time frame, probably on the 15. All right, because I look at the 4 hour, the 15, and then I enter in on the 1. You understand? All right, and that's what I would be looking for down here. I'm looking for a break of structure here to confirm that price wants to go lower. This is what I'll be doing on every time frame, but I'm not going to go into it right now. All right, going to the 4 hour is plenty enough. Look for bearish price action. Look for bearish price action come time for the open. And when you get your confirmations, boom, 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 that's when you would take your short. Okay, let's move on to the next pair, which is Cad Yen. Cad Yen, very similar situation. All right, I'm gonna run right through it because the setup's similar. You see how bullish it is? Okay, we've run up into a zone. This is the monthly, a zone of supply. And what am I looking for? The same configuration, same thing. All right, I'll do it one more time. Oh, come on, man. A high, a pullback, a higher high, a pullback that breaks that low, a return to impulse, and then down. This one looks a little more ridiculous. All right, that looks a little bit better, I think. All right, but you want to see price demonstrate with that impulse, breaking that low, breaking this low here, that it wants to go down. It's showing you its intent. You understand? And then you wait for the return to impulse to take your high probability trade. This is your confirmation, okay? But you have to get a confirmation before you do that, because price could definitely just keep going up. All right, so you're looking for the same thing. You're looking for the same thing in CAD Yen as you're looking for in US dollar yen. All right, you're looking for that yen strength to come in to drag price down over the CAD weakness. You understand? All right, let's look at the weekly. Let's just take a peek, see if we see anything extra. All right, oh man, good. All right, I like the fact that price swept this high, all right, to take some liquidity. And if we wanted to, of course, if we wanted to, this would be a refinement of this zone. This would be a refinement of the zone on the weekly. We could refine the zone up there. You see how it taps it right there. All right. And, you know, again, it could go higher and give us the configuration up here, you know, but we want to wait for the candlestick pattern to form. We don't want to jump in too early. That's the trap. Okay. You see how I got this hooked up here? If it gives us a break of structure down here, the price comes all the way up here. You see how it made this high here? We get a pullback, comes up higher, a little pullback, a failure to go higher. All right. I'm looking for this to come down, break structure, return to impulse, and then come back down. All right. If it breaks this low, then I'll be looking for it to return, pull back again, returning to structure so I could take a confirmation entry. All right. You understand? Get in a couple of different ways, but it's always going to be the same thing. After price demonstrates, like this break of structure here, demonstrates that it wants to come down. This is a return to impulse, and I'm looking for price to follow down, to follow through with that bearishness. So on the open for Cad Yen, all right, this is a bigger confirmation down here, all right. This is an earlier sign on the 4 hour. This is like a 4 hour change of character here, all right. That's not this is where I would look for a break of structure, a confirmation that price is definitely going to go bearish. This is an earlier sign, a change of character here. And I like this. I like this. You see that we're already getting bearish price action over here. All right. So I have a zone. What I don't know why it looks like that. All right. I have a zone here. If price opens up, you see how we don't even have a wick on the bottom here? And it's an inside candle again. All right. It did not break the low of the previous candle. There's a chance that this comes up and then comes back down. All right. It may come up to sweep liquidity and come off of this zone here. All right. This return to impulse, this originating order block here could return to impulse after a sweep of the highs. All right. Be aware. It can go here or bounce from here. All right. Or it can go straight down. All right. Because this looks like it wants to go on its way, but I'm looking for bearish price action. Bearish price action. I don't know what's happening with my mouth. All right. But it may come up on the open and then come back down. Okay. So just be aware of it, either this way or that way. One or the other, we're expecting bearish price action here. Let's look on the next one, which would be Aussie Yen. Aussie Yen got the same thing. Let's look at the monthly. All right. You see that price has reached a zone of supply. You see the wicks of rejection there. That's exhaustion to this momentum going up all the way up here. You know, this is very bullish, very bullish. All right. It swept liquidity on the way to a valid zone of supply, which when it was created, it swept the liquidity. It left a fair value gap that was immediately this was good price action. This is a efficient price action. That price came back up, filled that gap, and then came back down. So it's a nice displacement here. All right. So I like this zone. It led to breaking these lows and breaking structure. So I'm looking for price to be held here, held down, and for the bears to set in from here. Do you understand? I'm stuttering through my words because it's late and I'm a little bit tired. I'm sorry. So if we look at it on a weekly, we can see that we have a shooting star here. All right. And that's at the end, at the top of a rally. So we got a shooting star here, which is a bearish pattern. And we can see that there was some follow through with the next candle. It's a bearish candle. And then we have this this candle here. This is a bullish candle, but you can see that the sellers failed to break a new high. So I'm looking for price to more bearish candles to come after this. All right, break and going after these lows. Yes, I am. All right, it's going to be interesting. I know I'm out on a limb here. Not everybody's thinking that the yen is going to turn around, but I think it's that time. All right. So if we go to let's go to the 4 hour and see if we can see some price action. And come on, man, let's see if we can see something here that'll give us any clues. Now you can look at this. What is my pattern? What do I keep telling you? Same thing, right? This is all I'm looking for. Same thing. Return to impulse. This would be your entry. And what do we got here? All right. I'm looking at this high, pull back, not quite as high, but we break that high here, all right? And then what? We break the low here, all right? Return to impulse. Now, this could come up higher. You know, you see right here, watch this. All right, let's move in there. Let's get this camera in there. Like I got a camera. All right. You see how I like to see that price is trading back into and coming back up to the origin, right? This is not the origin. This is a decisional zone of supply. This is not the origin. So what does that mean? What that means is it's respected. It respected here. Yeah, you see that wick go higher, right? Sweeping that high, all right, for liquidity with a fair value gap above going into this supply zone, all right? But it respected this zone and closed way below, right at the midpoint, the 50% mark that I mentioned earlier of zones of supply and demand. And you see how price dropped from there. Do I expect price to drop further? Yes, I do. Look at it's starting to look bearish. Now we had that drop before, right? You see how 1, 2, 3 pushes up, 3 pushes up. Now, is it possible that price could find the origin, the originating impulse as opposed to this decisional box here? Sure. And we can look for that bearish price action up here, right? We can take that bearish price action up there and take that entry up here. Sure. And that would be an even better confirmation entry. All right. But what I'm looking for is if price continues bearishly from here. Okay, we have a bearish candle here that did not break the low of the previous candle. I'm keeping an eye on that. So that we're going to see if we get some more bearish action, so we can take out this low. Yeah, it's reacting to this this little baby demand zone right now. I don't know if this demand zone will hold though. All right, these wicks tend to get filled. All right, when the candle's built like this. So I'm gonna watch this on the open. If it starts trailing up, then I'm thinking that this high is in trouble. Why? Because it's a weak high, because it didn't make a new low. All right, and when you have a weak high, it gets ran for liquidity, and then we can look to take our shorts up here. Again, we're going to look for the same action. All right, I need that low taken out to show that price demonstrates that it wants to go lower. I want to see that pullback for the return to impulse, and we take our entry here, and that'll be a good short, a very good short. All right, but if price decides to break this low, wait for this demand zone to get taken out. Wait for this demand zone to get taken out, and then the pullback. That'll be your entry. I hope you understand what I just said. All right, be patient. You don't want to take a short into a demand zone. You want to wait till it's broken and then wait for the pullback. All right, it may pull back up to here. All right, this looks like this is an area that we want to watch. Okay, I don't want to get too bogged down in the details. Let's move on to the next one. All right, you got it on Aussie yen, and we're on the last one, New Zealand yen, New Zealand dollar yen. We're going to the monthly. What do we see? Price is running up into a supply area, right? But doesn't look like we touched that supply area. It depends on how you want to draw it, because this is the up move before the down move. All right, we could very well draw it this way. Some people will. All right, there's no doubt about that. Okay, and we're just now touching it. All right, and you see the rejection and everything like that. On the other hand, I'm looking at it. Where am I at? Yeah, I had it here. I really have it here. I really have it here, but I got it down here because of the fair value gap here. All right. If you go to the 2-minute, I want you to see something so that you know I ain't crazy. All right. You see how this looks? This is how I would normally draw this zone. Okay. That's where I'm getting that from. Okay. So, just understand we are touching the zone and we are rejecting from it. And we want to look at those candlesticks. We got a bearish one. It looks, and this is at the point at the top of a rally that looks like it could be a doggone shooting star. All right, let's take a look. The highest candle, highest reaching one is a shooting star, and we have bearish candle stick afterwards. This is looking like it is turning around, which would mean what? Yen strength. Shh. It's sneaky, man. All right. You see that price has already swept liquidity on the way up into this valid order block, just like the other ones, just like US dollar yen, just like Cad Yen, just like Aussie yen. All right. Same thing. All right. Let's go down to the 4-hour. Let's just get right down to it. All right. And what are we looking for? That same kind of price action, right? We see that we got a high here. All right. Then we get this, what do you call it? Microstructure or substructure here. And then we break that high. All right. And then what? We break the low, the swing low. All right. This is nothing but accumulation. All right. This is accumulation, manipulation with the breakout. Some people would call that a fake breakout. And then distribution coming out to sweep the lows. We swept the highs and then the lows. This is accumulation, manipulation, and distribution. AMD, check ICT if you don't know what that means. Okay. Now, this is a nice drop from here, isn't it? All right. More pronounced here on the New Zealand dollar yen than the other pairs. That's very interesting to me, right? So it has already demonstrated once it broke here. This is not what I wanted. All right. It already demonstrated that it wants to go down, but we haven't had a full return to impulse, have we? All right. Maybe because that momentum is too strong. All right. It's already beaten this high. Came back, swept that high, and took that liquidity, and then dropped. And we are now, looks like we are manipulating this low. And it's about being patient. We're waiting for price to let us know, hey, it's time to take this liquidity. All right. There could be a sweep because this is very manipulative. It could be a sweep to take the high here and the high here, maybe to kiss this this zone of supply, and then gives us the configuration up here, right? And then drop. I just want you to be aware that it may swing up on us before it comes down and takes out that liquidity and starts going further to the downside. All right, so we're going to watch the open very carefully. Look at these candlesticks. All right, you try and get involved here, and you're going to get messed up, man. You see how long it dithered around here. All this manipulating of the lows. It comes up high, sweeps the liquidity, then comes down a little bit lower, sweeps that liquidity there, and then we're back into this sideways consolidation once again. It's accumulation, manipulation, and then distribution. All right, and I expect another zinger, maybe a pump higher to take out the buy side liquidity, and then we take out the lows, and the price just continues to go down. All right, so that's it. I hope you gained something from this video. I hope it wasn't too long for you. I'm glad that you stayed to the end. Thank you very much for that. Do smash that like button, man. Act like there's a fly on it and smash it. Okay. Make sure that you subscribe to my channel so that you can catch my updates, and make sure you leave a comment and let me know which of the 4 you think is the one that you want to get involved with. Or are you going to get involved in all of them? Or maybe you see the market a little bit differently. I'd like you to leave a comment if you think that the yen is going to continue to be weaker than the other 4 currencies, the US dollar, the CAD, the Aussie, or the New Zealand dollar. All right, do that for me. Now, check out my other videos. I'm going to leave 2 of them on your screen right now. Click on the left one, and it'll take you to the right one, and you're going to be all right with me. Have a great weekend. Thank you.